Hello, Maverick traders. Welcome out to your market roundup for July 31st, 2023. Corey here with you, and let's get to it. We're going to go through the broad markets. We're going to talk about what's moving, specifically in commodities, the oil market. It was very interesting today. We're going to go through some technicals, talk about the overbought bearish divergences in the S&P and the NASDAQ and such, and then we will finish with some bullish, neutral, and bearish trade ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
A lot to get to. Let's jump in. As you can see, it was a quiet day. Dow, S&P, NASDAQ, all sideways. There was a bit more buying in the Russell 2000. These are really the small cap stocks and have been different than the variety of the broader market. So when you look at the Russell, it is up 1% on the day. Everything else flat. They're kind of coming after some of the lagging area. And then a big story today is oil. Oil is now positive year to date. And more than that, it's making new highs. Well, I guess it depends on what you're looking at. WTI is close to that. But anyway, Brent crude and so forth, depending on what you're looking at, is making new highs for the year. Oil up 1.5% today. And then in additional news, banks are pointing to tighter credit conditions for loans and saying that they're not going to be able to make as many loans, and that could start to hit growth numbers. Banks and their loans to corporations and to consumers is a big part of the driving force behind asset prices rising. And of course, if credit conditions tighten and fewer loans are out there, that means slower economic conditions. Advanced decline line, about 70% of stocks advancing today, and then the 50-day moving average continues to improve, 25% below the 50, 75% of stocks, or 3 out of 4 stocks, are now above their 50 MA. So let's jump over and look at the S&P. Now, I don't have the RSI or the MACD on here, but we talked about this last week, that essentially, as we're making this new high in the broader markets, the indicators have started to diverge. So if you were to put an RSI over it, it basically looks like this, where as the market was making higher highs, the indicator was making higher highs right along with it, what we would call convergence or agreement of trend. And now we've gone this path to higher highs in the market, and we're now making lower highs in the RSI and the MACD and so forth. That is a bearish divergence. It's a leading indicator, a suggestion that basically we're running out of steam, that we're running out of gas. It doesn't mean that the buyers are gone away. It means that the same amount of momentum or pressure is just not there. And you can see that there are some signs of exhaustion, similar to the exhaustion signal back here. Now, I do have to say that similar to here where there was exhaustion, the market was able to work that off over the next few weeks, over the next month or so, with a sideways consolidation. It's trying to do something similar. We haven't made any progress since the exhaustion signal. We've been down to sideways, but we're not really going down in any significant fashion. So we're still just chopping sideways at this point. If you get a continuation candle, the look would be for either a big break higher or a big roll over would kind of split the difference and really suggest that instead of this consolidative phase, that one of the groups is gaining control. So if I see a big bullish break or a big bearish break from here, I think that has some added significance and should have follow through. So if we reverse hard to the downside, you should see continued selling and a push to a lower low. If you see a big break higher, you should see pile on buying and another push to a higher high is the way that I would look at things. Because again, we're at a bit of a stalemate. We need something to push one way or the other. On the heat map, healthcare still kind of struggling, a bit more red there than elsewhere. Energy was the big story today, like we talked about. It was the biggest mover. Small caps were moving, but energy being up 1.5%. You can see the biggest companies, Exxon and Chevron, up 3% apiece. There was definite buying and pretty much all green. Now, as we look at different ideas, we've got a few on the bullish, the neutral. I'm highlighting a sector, which is consumer discretionary. And then on the bearish list, we've got a few names as well. We'll look at a couple of these charts. The first one, ABC. This stock has pulled back in price. It's back towards the 50 MA. The last time you had a deeper pullback, look at the nice reversal and clear upside move. Here, we formed a big hammer candle. When you get a big hammer like this at a significant level, it can often lead to some follow through. This stock has a psychological round number of 200 per share in its sights, and I wonder if this is the reversal that takes it up towards $200 per share. So the stock ABC looks like a buy the dip possible buying opportunity. UNH, these are some lagging areas that I would rather look at the reversals that happened today and the reversals that have happened recently and say, okay, if this market is to continue, I don't think it's going to be led higher by tech names. This is one of those circumstances where a lot of things have advanced and it seems as though they're coming after some of the laggards. That's what can propel this on the next phase. Notice the Russell, which has by far been the worst performing major market. The S&P, the Dow, the Nasdaq, they've blown it out of the water. The Russell's been down year to date just recently. Well, IWM was up 1% today. They're coming after some of these laggards, and I'm intentionally looking at these as possible upside ideas. Now, if you wanted more of a sideways trade, I would suggest looking at XLY, which is the consumer discretionary ETF. To me, this is a classic exhaustion, and I suspect we'll spend the next few weeks within a range, and I'm going to call it between about 178 to 164, something like that. And that's a wide window, but I just don't think we're going to progress much outside of that. So we're closer to the top end of the range, I suspect. I don't think this is going to lead to new highs. I think we're stuck in a rut in XLY. So look inside the consumer discretionaries, in my opinion, for possible sideways candidates. And then on the bearish side, here's CCI, which is Crown Castle International. Notice the lower highs that have been in place for quite some time. Even as the market's been strong, this thing looks like death and looks like it's going to trade lower. And an obvious target would be $100 per share, a big psychological whole round number that might have some gravitational pull down to 100 or even a temporary spike below 100 to finish this downside move. And then Gilead, another one on the bearish list that may be poised for more downside. Now, Gilead, a word of caution, they do report earnings, I know, on Thursday. So that's bit of a wild card. You don't know quite what you're going to get, but my overall instinct would be to still expect this stock to make some lower lows. We're overbought for an extended period of time. Normally, when you first get overbought on an RSI, we call it going into overdrive. It's actually a buy signal, right? But if you've been overbought for multiple weeks, an extended period of time, like the QQQ as an example, then you start to see divergences pop up within that overbought condition. That's not overdrive. That's not where things tend to accelerate. That's where things tend to run out of gas. Payrolls on Friday. We're still right in earnings season. Apple and Amazon report on Thursday. Alibaba, I think that's Tuesday. Berkshire over the weekend, so it's not even during the week. It'll report on Saturday. Conoco and Pfizer, Starbucks, Toyota, Uber. We had highlighted some international areas last week. I highlighted KWeb, which is Chinese internet, and EWJ, which is Japan. If you're trading EWJ, Toyota is the biggest component, so be aware of that. Hope you enjoyed today's market roundup. Have a great rest of your week, and we will see you next time. Goodbye, everyone.